Hey guys, welcome back to the channel. Hope you're all doing well. In today's video, I'm going to go through and explain what a fair value gap is. So first of all, I just want to mention, obviously, a fair value gap is known as different things by different traders. So a fair value gap might be known as inefficiency, it might be known as imbalance, it might also be known as a fair value gap. So just keep this in mind when you're hearing people use different terms. So if you hear one person say imbalance, if you hear one person say fair value gap, just know that these people mean the same thing. So, a fair value gap can be used as an entry point, it can be used as a confluence for your supply and demand zones, your order blocks, whatever it may be, and it can also be used as a point of interest as to where you might think price might react from, or where price might go to, and it can also be used as an exit point. So first of all, let's just start off with a simple diagram just to explain what a fair value gap is. So we've got a 3 candle formation here, right? And let's just say this is a bearish market. So price is coming down, and it's coming down with, it's kind of an impulse. It's coming down with displacement. It's coming down with momentum. And what we will want to look out for is we will want to look out for a gap between candle 1's wick and candles 3. So as you can see, if I just draw a little line over here, so we've got a gap from candle 1 to candle 3. So let's just draw a line right here. So what you will notice at this moment in time, if we add a situation like this in the real life market, there is just selling pressure within the market right here. And as you will see, there is a gap between the wick of candle 1 and the wick of candle 3. So what we are looking for is sort of this area right here. So if I just draw the box out and I will change the color. So as you can see, there is literally just a box right here, and sometimes what will happen is price will come back up, it will react to the fair value gap and it will move away. Or what you can use this as an entry point. So what you might do is you might enter a trade from the fair value gap, and then you might want to cover the high of the candle that does obviously create the fair value gap, or you might want to cover the total high right here. Let's just say we've got a couple of candles coming up this side, and then here we've got a swing high, and then price breaks down, market structure shift, whatever it may be, you've got a fair value gap here, and here is where you might enter a trade. So let's go on to the charts now and just show you kind of what they look like on the charts. It's really simple, it's a really easy concept to grasp, and if you go on your own charts and have a look at this yourself, you will notice fair value gaps pretty much anywhere. So as you can see, if we just we'll go from right to left and we'll just go through and see what we can find. What you will notice here is we've got obviously these candles, and if I just mark out this fair value gap, we've got a fair value gap here because we've got a gap between the wick of candle 1, which would be this candle, and we've got a gap between candle 1 and candle 3. So if I just mark this out with this little pencil right here, obviously the wick of this candle doesn't touch the wick of this candle. So super simple stuff and super easy. You will notice it when there is a big impulse or displacement in the market. You will notice the fair value gap's quite easy. If we just go through and go ahead, as you can see, there's a really tiny fair value gap right here if we zoom in. But these are the ones that you don't really want to take notice of, because we've got a gap between candle 1 and candle 3. Move this out. As you can see, all of this right here is pretty much just a void within the market. The wick of this, because there isn't a wick on this candle specifically. And then obviously the gap is right here, so this here would become the fair value gap. If we just go out and choose some more clear examples right here, as you can see, right here is a very good example. So let's just say this candle here, this little doji, is candle 1, and then this here is candle 3. So what you will notice is the fair value gap, candle 1 to candle 3, the middle candle being candle 2, and this is where the fair value gap is. As you can see, there is a big energetic move. We've got displacement above this high right here, leaving behind this fair value gap, and eventually what will happen is price will come back. It doesn't have to fill it straight away, but a lot of the times, as you can see right here, obviously if we go back to this example, we get displacement above this high, we break structure, we've obviously got a gap between candle 1 and candle 3. Obviously, let me just mark this out. So we've got this box, candle 1, candle 3, fair value gap, price comes back, taps in, and then it moves off. Obviously, it does come down a little bit lower, and tag into, sort of this order block right here, and this right here would have been a beautiful trade. It shows you that momentum is in the market because we've moved up very energetically right here. We've got a super nice impulse, displacement, whatever you want to call it. It comes back correctively, taps in, and then away we go. It's a really simple concept to learn, and it's a really simple concept to see on your charts. If you just go through and just use a concept that I did mention in the beginning of this video, obviously a gap between candle 1 and candle 3's wick. This wick here is not touching this wick, which leaves this total imbalance and fair value gap on this candle right here. And then you can obviously use a box, whatever you want to use, and just mark out the fair value gap. You can use it. You can, mark it as a FVG, put a little bit of text in there just so you know what it is. As you can see, you will notice a fair value gap a lot of the time when displacement is within the market. Again, there's a clear one right here. So we get displacement in the market right here. So we get a nice push up. We've got 3 candles in a row, 3 bullish candles, really nice big candles as well. And we are on the 15-minute chart. So, there's a lot of momentum right here. It leaves behind this fair value gap. What happens then? Price comes back, taps into this fair value gap with this candle. The very next candle taps into our fair value gap, and then price moves away and continues, obviously, with the bullish momentum. So yeah, that's just about it for today's video, guys. If this video did help you out, if you have any questions about fair value gaps, imbalance, inefficiency, whatever you want to call it, feel free to drop them in the comment section down below. I'll be sure to get back with you whenever I can. And without further ado, guys, thank you very much for watching, and I will see you in the next one.